Hey everyone, Steven here with the Trader Channel, and today I'll be sharing with you one of my favorite trend continuation trading strategies. The reason this strategy is one of my favorites is because it is very simple yet very effective when the market is in trend. In order to utilize this strategy properly, you will need to know how to read structure and how to determine trend. And if that's something you're having trouble with, then go ahead and subscribe to this channel because I will be doing a video shortly on how to read structure and how to determine trend in the market. So hit that like button and hit that subscribe button while the intro and disclaimer roll, and I'll be right back. Okay, so I'm going to briefly go over the close above, break above, and close below, break below principles, just to give you an idea of what I'm talking about. As I said before, I will be doing a video further explaining how to do this. But here in this situation that we see, forgive my terrible drawing of these candles, but we see that the market came up, retraced down to this swing low, and then we broke above the most previous structure level here. And since we broke above and closed above this most previous resistance level, our expectation would be a continuation of bullish momentum, a continuation to the upside, before a break below the most previous swing low right here. So what we expect this market to do is to go up further before it comes down and breaks below this most previous swing low. And the way we take advantage of this using this trading strategy is after we get a break above, close above the most previous resistance level right here. After we get a break above, close above this level, we take a Fibonacci retracement from our swing low right here up to the highest swing high before the market starts to retrace. And all we do is wait for a 786 retracement. As I said before, very, very simple, yet very, very effective strategy. The reason we wait for this 786 retracement is because we expect the market to continue bullish before breaking below this swing low. So what that means is if we wait for a 786 retracement, we can put our targets back up at previous structure because we expect the continuation of the bullish trend, and we can put stops down here below the most previous swing low, just in case we're wrong, because if we are, we want to get out for minimum losses if we're wrong, and we have an opportunity for a very nice gain. And I hope that makes sense. If it doesn't, then leave me a comment and ask any questions you might have, and I'll try to answer them best I can in the comment section below this video. I'm going to now go to the charts and show you a few examples on the dollar yen that we took advantage of over the past couple of weeks. And then I will show you a live example of this trading strategy on the Euro Aussie 15-minute chart. Alright, so here we are on the dollar yen, and I'm just going to start right here in a random position on the chart and show you a few examples of the trend continuation 786 strategy. So what we look for first is a break above, close above, or break below, close below of a previous structure level. Here is our previous resistance level. We obviously break above and close above it right here. Since we broke above and closed above that level, what I would do is, if this market had not already played out, if this was all to the left and I had no right into my chart, what I would do in this situation is take a Fibonacci retracement from swing low to swing high and wait for the 786 retracement right here. And as we can see, the market rallied before ever getting close to the 786, which is fine. That will happen a lot. And next off, let's continue on the chart. As you can see, we get another break above, close above this previous resistance level right here. On this candle, we break above, close above this level. So what I would do is take a Fibonacci retracement from this swing low, the most previous swing low here, up to the swing high before we start to really retrace. And as you can see, we came down here to the 786, would have been filled on this order, and we would have hit targets there, coming up to this previous resistance level, which is where our targets would have been, and our stops would have been below our most previous swing low. This would have came down and put us through a little bit of pain on this wick right here, but we would not have got stopped out on that trade. And we just continue down the charts doing this same thing right here. Break above, close above this level. So now we're looking at this most previous swing low right here. So we come from this swing low up to the swing high before it starts to retrace. We would have bought the 786 right here on this candle wick, and we would have been stopped out of this trade. But look here, look what happens now. Now we have, instead of breaking again to the upside, now we have broke through this support level, and this support level. What that tells me is bearish rotation. Now that we've broke down below these support levels, I'm in a bearish trend mindset. With that being the case, I'm going to now take a Fibonacci retracement from this swing high down to the swing low and look for my same 786 retracement. As you can see, would have been filled here, and this is a trade we actually took advantage of. We were filled there, and the market eventually rolled over and did hit targets. So I hope that helps you to better understand the 786 strategy. As I said before, leave me a comment if there's something you don't get about this strategy, and I'll try my best to answer it in the comment section below this video. I'll now be showing you a live example on the Euro Aussie 15-minute chart. Okay, so here we are on the Euro Aussie, awaiting the completion of the 786 strategy that I was talking about. And pretty much all we're doing here is waiting for a break below, close below of the previous structure, and then putting a limit order at the 786 Fibonacci retracement, a stop loss above your previous swing high, and profit targets at the lowest body of the previous swing low. And there we go, we're filled, and I will keep you updated on how this trade plays out. And as you can see, guys, we've come up into our 786 retracement here and immediately turned around. We've now made it about halfway to targets, so we'll see how this plays out, and I'll be back to update you. Alright, here we go. So we've gotten within about 5 pips of our targets here, and when we get down here within 3 pips, I'm going to move stop losses to break even so that we can be in a risk-free trade, and hopefully we'll see this market continue down. As you can see, we've made a lower high here, and then we put in a very long bearish candle so far, and this candle has 15 seconds before it closes. If we can get under these lows right here with this candle, then our stop losses can be moved down to break even. So now we've got within 3 pips of our profit here. What I'm going to do is take my stop loss, bring it down here to break even, and take all the risk off the table on this trade. So this is now a risk-free trade. And here we are within 1 pip of hitting targets. Just waiting for it to press a little bit lower so we can get out of here with some money in the bank. And there we go, guys. Targets filled. Alright everyone, so that's going to do it for today's video. I hope you enjoyed this video. I hope you liked it. And if you did, go ahead and hit that like button. Go ahead and hit the subscribe button so that you're notified anytime I create a new tutorial. And I do want to remind you guys that this strategy does work for me, but it may not fit your trading style. This is something that you definitely want to back test yourself on your specific pairs that you trade and the specific time frames that you trade, because depending on those two factors, the results of this strategy will vary dramatically. So it's very important that you do your own due diligence and backtest these trading strategies for yourself to see if it fits in your trading plan. And with that said, I hope you enjoyed this video. Keep an eye out for my next one. Best of luck on all future trades, and I'll see you next time.